If I had to start my trading from absolute scratch, these are 5 things that I would focus on going into my new journey. Now, the reason why I'm doing this video is because I see a lot of you guys wasting time, money, a lot of your effort on things that aren't making you reach this next step in your journey. And not only that, I mean, it could actually protect some capital in your trading account and help you pass some funded account. So my name is Kale and I've had multiple funded account payouts as well as through my personal capital as well. I'm going to leave a few screenshots up here, but this is really a video that's going to help you. So stay tuned, keep an eye out, and maybe you can learn something. My first point is stop jumping from strategy to strategy. The reason why I say this is because there's a common mistake in the trading community and in the trading industry, because guys have this shiny coin syndrome where they see someone else profiting and you are stuck here still taking losses and not finding consistency in your setups. Now, one thing we need to understand is building up data behind your strategy is very, very important. And we need to understand that applying the same strategy that you've been taught maybe off YouTube videos or through a mentorship program does not happen in a single day. You have to understand the nature of the market, understand how the pair works during news events, high volatility events, opens of certain sessions like London, New York, Asian. These are very important sectors that help you build your overall picture and idea around your strategy that you are trading on a day-to-day basis. Now, yes, it's not going to happen overnight. It takes a bit of time to build it. And that's essentially why you guys are jumping to the next strategy, because you see someone else making money when you are not. And they probably went through that exact same position as you, building up the time, putting the effort in, building up the data behind exactly what they're and able to make consistent gains from the market. And within that, something we need to understand is stop taking 10 million different setups in a day. Stick to 1-2 setups a day, build up the data behind that, and take your entry and clean entries according to the rules that you've set in place, according to the high probability setups that you've learned from the YouTube videos or the mentorship program. Then you can start to build up confidence in yourself to actually identify exactly how to apply that strategy every single time. The reason why I talk about high probability setups and why you should use them and look for them every single day, it actually gives you confidence in your trade ideas that you're building. Where I find myself in my early stages of trading was simply hunting every single trading setup that I could possibly take. And the thing with that, and the problem with that, is actually lowers your confidence level in the understanding of the trading model or strategy that you are using. So by picking high probability setup doesn't only increase your consistency, but also helps you identify the areas that you can improve. If you're taking every single setup out there, you're not going to know where exactly to improve, and then you're probably going to jump strategy because it's not working for you at that time and moment. So advice on the first point is stick to 1 or 2 setups max a day, whether you're back testing or you're actually taking trades, and build up the data behind it. And that's going to lead into my second point. Building up data behind your trade ideas is so important, and it's not going to allow you to actually progress in your trading career if you can't identify the exact mistakes that you're making every single day. So this is a platform that I've developed in terms of actually tracking data so that I can see exactly where I'm going wrong. This is a demo account that we've hooked up to this, and exactly to show where the stats and where we can improve. Something that I've realized a lot with traders is they think that they're making money in 1 week, but their overall performance is down. So if we look at this example here, there is 1 or 2 good weeks that we are making money and making, looking at an equity curve, and it goes up within that single trade. But overall, your equity curve is still going down. Something that's very, very important to understand, and not just looking at your MT5 or your MT4 and seeing that negative balance when you go to the 6-month or 12-month history, and then you look at your 1 week and you're in profitable. No, we want to see a smooth equity curve going up due to having backtested data. Now, this platform, you can see that we have a 40% win rate currently hitting at the moment, about 373 trades. And you can see overall max drawdown is about $1,044. Net P&L, $657 in down. Current balance is at $9,342. Again, demo account, negative 6.5% return. So obviously on this count, we're not down major in terms of percentage, but we are down 6%, which is a lot of money if you don't know how to actually manage your risk correctly. Within this data, simply on this platform that we've developed, you can actually see exactly why it's important to journal your trade ideas. This is a demo account to show you exactly what we can see. So here On this account, we can see we're taking 4 trades on Thursday. Now, if we had to go look at it, we can see that our P&L is actually still negative. We're taking 4 trades. If we took 1 to 2 trades looking at high probability setups, we could have seen a lot less downside risk. Doing trades is so important because you need to start to identify exactly what is costing you money and what is actually making you money. And the saying goes, you can't improve what you don't measure. And that's why it's important to journal the trades, put screenshots of your trades that you're taking every single day, stick to 1 to 2 max a day. The reason why, I don't like homework. So you having to do 4, 5, 6 trades a day. Imagine the homework that you're going to be sitting trying to jot down every single trade idea that you put there, right? So using a platform, using an Excel spreadsheet, very, very important so that you can start to identify those mistakes that you're constantly making and that you can hold yourself accountable to that. Now, coming back to the P&L here, I just want to point out once again, 40% win rate and is down in the negative. Now I'm just going to go to another portfolio. I want you to take note of that 40% win rate, but still negative and to the downside. What we need to look at here, this is a live account that I'm working with. We have a 47.62% win rate, but we're still up 58,000 Rand in profits. Yes, the return is small. We're up 3% on the overall account, but that is money. Risking small, risking that 1% to make that 3% on a single trade idea can pay you. And on this note, with journeying your trade ideas, it's amazing to see exactly those areas that you can fix. For example, you might be still risking that 1% on per trade idea, whether it be funded account or personal capital, but you need to realize that you don't always have to take a full stop. Sometimes you can cut it at 0.50. So at the moment, we've taken 21 trades. Our risk to reward is still really good because what we're doing is we're cutting our losses shorter than our actual overall risk that we're putting on the trade idea, so that our equity curve might look slowly going down, but when we're hitting a banging trade, we can get right back up into profits because we are managing and mitigating our risk as best as possible and managing the trade correctly. Now, I wouldn't be able to identify my data and stats if I didn't journal my trades, as we could be doing the same thing that is over and over and over again. That is definitely costing us cash flow. So second point, make sure you're journaling your trades, build up the data, understand exactly what is costing you money, where you can improve so that you can see the progression and actually see some consistent results in your trading. Thing is actually understanding the reality of trading, right? And this is in terms of capital, this is in terms of the time horizon that you're going to be trading and how long you've been on your journey, and actually understanding the goals behind exactly why you're doing this. When I first started trading, my mistake was I want to do this because I want to make money today. I want to do this because I want to get rich. I want to do this because I see influencers making a lot of money from it. Now, this is the wrong and negative mindset to come into it, because we need to understand that this is a proper study. This is something you have to put time and effort into to actually reach that goal. And of course, it's not going to take you 3-4 months and you're going to become this excellent profitable trader that is making 6-7 figures a month when it comes to the markets. If you're lucky, yes, there's a few flips and dips, but that's not consistent. Ideally, you want to have consistent results so that you can see a long-term feature in this. So understanding exactly where you're on the journey is very, very important. As I said, it's not going to happen overnight. So there's 5 stages of a trader's emotional journey. And the first step would be excitement and euphoria. Emotions, hope, thrill, and overconfidence. Your behaviors, just discovered trading. It feels like a game with ultimate income potential. Take random trades without a strategy. Beginner's luck can force bad habits, right? Then you're coming down to this point here and you're breaking below. Confusion, frustration, the realist, right? Emotions, doubt, frustration, anxiety. Losses start to pile up. Inconsistency becomes apparent. You realize strategy matters, not hype. Risk, revenge trading, blaming the market instead of owning your mistakes. Realizing trading is harder than it looks. Right, then you go to the next stage, which would be stage 3. The emotions, focusing on humility and hope. Behaviors, begins tracking trades and journaling and accepts that losses are part of the game. Focusing on risk management, edge, psychology, fewer trades, and better quality. Creates a trading plan, moves from a demo to a real account with rules, accountability, and feedback. Stage 4 would be confidence and consistency. Emotions, confidence, patience, and control. Win and losses don't emotionally affect you. Follows a defined system with discipline. Trade less but more profits. Stops trying to predict, starts reacting to price results. Small consistent growth. Scaling up responsibly. Risk per trade stays fixed. Then your stage 5, mastery and fulfillment, the legacy builder. Emotions, fulfillment, gratitude and calm. Behaviors, trading fits into your lifestyle, not the other way around. May look at advice or manage funds. Portfolio includes long-term investments and active capital. Focus, wealth preservation, scaling and automating, giving back. Right? Most of you are actually still stuck at this phase. You've been trading for 3-4 years, but you're still stuck in the confusion and frustration. And that comes back down to my second point. When you're not actually building up data, you don't have a strict trading plan in place. These things are very, very important. Otherwise, you're always going to stay in this little section. And there are times where you might almost go to stage 3, but then you're setting yourself back on stupid mistakes that are costing you money over and over and over again. And I see a lot of you guys are trying to tell the market what to do, but not react off it. So if you're still in the stage 2, then there's something that needs to change. And that's what you need to realize. Stage 3 is actually the second hardest part, and that's realizing and taking accountability of the mistakes that you're making. But it's actually the most rewarding part because you're finding yourself those mistakes and you're improving it on a daily basis. That not every trade is a trade that you should be taking. Realizing that data is very, very important behind your strategy. Realizing that this is not a get-rich-quick scheme and that you need to put the time and effort to actually build some good ideas, executing good ideas, and managing your trade well. Then you get to that stage 4, as I was saying, where it's actually starting to make a lot more sense. You're getting to the point where you're finding consistent results. You're getting to the point where you're passing funded accounts and getting payouts. You're getting to a point where your personal capital is growing and you're paying yourself on a monthly or maybe even quarterly basis. Then it's stage 5 where you're actually looking to start taking those profits and reinvesting it into longer term portfolios. These are the stages that you're going to be going through. So again, if you're still in stage 2, there are things that you need to change, whether that be identifying those mistakes that you're making and actually wanting to fix them, realizing that signals, just copying people's ideas is not going to get you to that point where you're making consistent gains from the market. And don't worry, I've been through these stages. I know how difficult it is and I understand the struggles. I mean, I was in stage 2 for so long, finding a little bit of consistency for about a week or 2 weeks, but then losing everything to the markets once again because of my overtrading, over risking, not picking good execution ideas. It's just actually all going to bring you down and it's going to keep you in this point till you actually build that data and want to start to improve. Fourth point, if you don't have someone that's holding you accountable, it's actually going to lead you to the worst position possible. Accountability is so important, as that's what takes you from stage 2 to stage 3. And essentially from there, it's stage 3 to stage 4. I've been trading for this long period of time and I can still say I still can't do this alone. Not because I don't know what I'm doing. I have my partner Zach, and I'll leave his YouTube link in this video, so make sure to go check him out. He posts a lot of valuable content just as me, but I have him by my side and reviewing my trades, not because I don't know what I'm doing, as I said, but to help me stay humble to the markets, to correct me in the areas that I think I can still improve, as there's always room for improvement. One thing we need to understand is that we are not the best at everything. What I've realized between myself and my partner is that I might be really good at mitigating risk, but he's really good at holding side still full TP. And that's where I can learn from him and he can learn from me. That's why it's important to have someone that's holding you accountable in the areas that you know you are lacking. And that might be humiliating at first, building up the strategy, building up the data. You're going to make quite a bit of mistakes, and your partner or the person that's holding you accountable is going to look at this and see not that you're doing terrible, but the fact that you actually want to improve. So having someone that's going to hold you accountable is not only going to help you increase, your profitability, increase your discipline when it comes to trading. As I know, it's very, very, very difficult to click that button and make thousands of dollars, or click that button and lose thousands of dollars. It comes to a point where if you are not being held accountable, we are left for room to make mistakes. But when we are, that room becomes a lot smaller. And if as a trader, I can minimize that room for mistakes as little as possible, I'm going to be putting more money on my table, on my plate, as well as my bank account. Understanding that trading is a business model and it does not come cheap. I thought, cool, I'm gonna be putting $500 or $1,000 and I'm gonna become super wealthy of this. What you need to realize is if you're jumping into the trading markets, get ready to pull up your socks, because we need to understand that it doesn't take this little capital. In order to make money off the trading markets, you need to have money. Now, of course, funded accounts are a great way to start scaling up capital and earn these or reach these goals in terms of equity and profits that you want to, but the accounts still cost money. And if you look at my previous video, I'll leave a little tag here on the top right. Trading funded accounts and trying to pass funded accounts, the probability is actually not in your favor. And that's why purchasing multiple funded accounts does not come cheap either, to actually try and put probability in your favor. Trading doesn't get you from 0 to 10, it gets you from 2 to 10. That 0 to 1 is actually you putting in the work, you finding a job and having some sort of income behind you so that you can fund this trading journey. I went through a stage where, as I said, I was trying to put $500, $1,000 into a trading account, made a bit of money, flipped it, but it was never enough. And that's something you're going to understand. 1, 2, 3, 4, 10K, 20K. If you had to flip it, it's never going to be enough, because you're going to come back to the markets with that same gambling mindset. Because if you are flipping an account, you definitely didn't apply that risk management. You definitely didn't apply your trading rules to it. So trading with larger capital is the only way to stay consistent in the market. And that's what I realized 3 years into my failing and making money in this journey. So once I got to that stage, then I started to reinvest, get a surplus of income, reinvest into the market the right and correct way after I've been trading on demo accounts, building up the data, building up confidence in my trade ideas and my strategy, so that when I do buy funded accounts or when I do invest in my personal capital, I know exactly how to stick to my rules and set proper goals in place. The next thing on that point is understanding that getting the right knowledge from the beginning, or actually getting a proper mentor, is not actually the worst idea. Yes, of course, you're spending, a couple grand on a proper mentorship program, but that's not going to set you, a few months back in terms of capital. It's going to set you a few months forward. Think how many times you've blown account. Think how many times you've spent money onto a trading account, made money, but then blown it again. Imagine you had to just take that step to actually purchase a proper mentorship program that's going to teach you from A to Z with live guidance, with a strict blueprint on a roadmap plan of explaining exactly each step that you need to take. These 1 or 2 or 3 years that you've been spending money on your trading accounts or losing money to the markets and just trying to watch YouTube videos, it's actually costing you more to do that, when actually just having that proper program that's going to spend 6 to 12 months in 1 year of straight building up data and proper guidance is going to set you so much further. I've spoken to many guys over these past few years of being a proper mentor to my guys, and they all come with the same mistake. Kale, I've been trading for 3 to 4 years and never finding progress. Kale, I've been trading for 6 months, I'm still losing money. Kale, I've lost over thousands of dollars in the market and I've still not found consistency. Then they come to me or they go to another proper mentor and start to find consistency because they're getting the right guidance. You need to understand that learning through YouTube videos is a great way to understand and get your idea about the market, but taking data or understanding a strategy from YouTube is not going to teach you how to actually apply it to the markets every single day, as the markets look different every single day. So trying to apply this and put it into the market can become very difficult, but you might understand the strategy over the YouTube video, but it's still going to take you 1 to 2 or to 3 years to learn how to apply it correctly and with rules in place. That's why paying for a bit of mentorship is actually not the worst way to go, because your time frame or your learning curve just does this. It shortens by a lot. So I hope you learned something in this YouTube video. This is exactly what I would do if I had to start trading from scratch. Hope you learned something. Make sure to book a call if you want to join my team, or if you are looking to invest into a proper mentor, do your research about them and take my advice. Build up the data, build a proper trading plan, understand your goals behind exactly what you're doing when it comes to the markets, understand that it's not a get rich quick scheme, understand that accountability is very, very important when coming to your trading career and want to see progress in it. Hope you learned something. Peace out.